Hello everyone. In this video I'm going to walk you through Chapter 7. In this chapter we're shifting our focus from recording transactions to looking at the financial statements that summarize everything that we've done so far. This is really the culmination of all the work you've completed in Chapters 1 through 6. Every sale, every bill payment, every payroll entry now flows into these reports. We'll use Sage 50 to generate the company's financial statements and see how those earlier transactions are reflected in those results. As long as your check figures match at the end of each chapter, your financial statement should line up with mine. If something looks off, it likely means there's an error in one of your earlier chapters, and if you go to Canvas and look at my feedback, you should be able to figure out what was wrong from that feedback. So let's get started and open up Sage and get into these financial statements. So I'm going to click on Open an Existing Company. I'm going to find the most recent bellwether in the list, this top one, looking at the time and date stamp, and then click OK. So to create the financial statements, we're going to click on the Reports and Forms drop-down menu, and then we're going to select the report category of financial statements. Here we have all the different financial statements that are built inside of Sage, and for right now we're going to start off with the income statement. We have several different versions of it. I'm just going to go with the standard income statement. So I'm getting a prompt here for the time period in which I want the financial statement to cover, and I am going to leave it at current period. And then also there's a checkbox down here where it says show zero amounts, and I'm going to ask you to do this as well. I want you to uncheck that. It'll clutter up the report if we have a bunch of accounts that are being used, and I'm going to get rid of those zeros by doing that. So then I'll click OK. So something I got to say before I comment on the income statement here is that we have not prepared adjusting entries for this Bellwether Garden company. So the financial statements would not be made until the company's gone through the adjusting process, and just foreshadowing that we will do that later in the class, but right now we haven't done it, so these financial statements are really not accurate and complete because we haven't recorded those adjusting entries yet. So here we're looking at this income statement for Bellwether Garden Supply. And the income statement, which is sometimes also called the profit and loss statement, summarizes the company's revenues and expenses over a period of time and shows whether the business made a profit or loss. So we can see here we have a section for all the different sources of revenue. We've got a column here that's labeled current month, and then we also have another column labeled year to date. And it's showing that this information reflects the first 3 months of the year. So your total revenues should match up with mine. Then we have a section that's looking at cost of goods sold, and it breaks down cost of goods sold into different components. And then we took the difference between the revenue, which is what we earn from our customers, and subtracted out the cost of providing those goods and services to arrive at the business's gross profit. Then we have a section that lists all the other expenses of the business, and the gross profit is taken, and we subtract those expenses from that, and that's how we arrive at the net income or net loss. In this case, those expenses exceeded the gross profit, so the net income is actually negative here. It's a net loss. Also, next to these amounts, we have percentages. So what this is showing is a percentage of revenue here. So the total revenue here you can see is at 100%, and each of these line items was expressed as a percentage of that total. So they took the $295, for example, and divided it by the total revenue, the $88,881.16, and that's how they arrived at 0.33, and that's a percent. So it's really what's called a common size income statement, expressing each line item as a percentage of the total revenues. I am going to want you to verify that your net income amount matches up with mine for both the current month and year to date. And if it does, then you are ready to submit this report as part of this week's submission. So the text mentions making an Excel copy as well as a PDF copy. All I really want is the PDF copy. So follow the process we've been following along for the rest of the reports in the class. Click the PDF button, find a location that is easy for you to locate the files afterward, desktop, downloads, documents most likely, and then save your PDF with a Chapter 7 income statement name. The next financial statement that we're going to take a look at is going to be our gross profit by department. So we see that here in the report chooser in the financial statements group right at the top here, gross profit by departments. And I'm going to make sure that the zero amounts are not showing, so uncheck that and then go with the default date. Should be showing activity during the month of March. As we can see here, Bellwether has divided its company into three departments: aviary, books, and equipment. We've got revenues, cost of goods sold, and gross profit for each of those three departments. This helps management see which areas of the business are performing the best and contributing the most to overall profit. Once again, I would like a PDF copy of this. Make sure your figures match up with the screen here, and run a PDF, and that'll be part of your submission as well for the week. The next financial statement that we're going to create is going to be our balance sheet. So open that up, and once again, don't show zero amounts. You can leave the time default as is. And a balance sheet is also sometimes referred to as the statement of financial position. It's a snapshot of the company's assets and liabilities at a particular point in time. So we see here that it's actually a classified balance sheet that we're looking at. The assets are put into buckets, into categories. So we've got current assets, we've got a category of property and equipment, and another one of other assets. We've got totals for each of those three categories of assets, and then we have the individual amounts within each of those categories. These amounts, and I should have mentioned it with the other financial statements, they're all interactive, so I can, the individual amounts, not the totals. So if I double clicked on any one of these, what it would do is it would pull up the ledger for that particular account. So I'll do that with regular checking for a moment. And here we have all the activity during the month of March with that regular checking account. Then these become interactive, so if we had to investigate a particular transaction, we could do that from here as well. If I scroll down a little bit, the liabilities are also placed into buckets, into categories. We have current liabilities and long-term liabilities. And then finally, we have the equity section. And instead of rolling the net income and including it in the prior retained earnings, Sage separates out the current net income from the prior retained earnings. Remember that the financial statements are tied together. This net income amount would be reflected on the income statement as well. And if you remember from that one, it was showing as negative, but that was for the current month. I believe this is going to show the year-to-date net income. Once again, make a PDF of this balance sheet, save it to an appropriate location that's easy to find. It'll also be part of your submission for the week. The next report that we're going to create is going to be the statement of changes in financial position. And down in this list here, it's just standard statement changes. Here it describes it in a little bit more detail. Once again, we're going to not show the zero amount, so uncheck that. Go with the default dates. The statement of changes in financial position is closely related to the balance sheet. While the balance sheet gives us a snapshot of assets, liabilities, and equity at one point, this report shows how those balances have changed from one period to the next. So it's basically, if you had a comparative balance sheet which showed 2 years worth of data, you'd be taking each line item and looking at whether it increased or decreased, and that's how you'd create this statement. And this report and that idea of looking at how those account balances would change from year to year on comparative balance sheet, that's valuable because it helps you see the bigger picture of how the company's resources are shifting over time. It helps explain why the company's financial position changed. Maybe cash went down because you paid off debt, or assets increased because you purchased new equipment. It pulls together all those movements so you can understand how management decisions and operations affect the company's overall financial health. Once again, make sure to save a PDF copy of this report and save it to a location that's easy to find, because you're going to have to upload this one as well. The next financial statement we'll take a look at is going to be our statement of cash flows. So in the list here, it's standard cash flow. Once again, don't show the zero amounts, use the default dates. The statement of cash flow explains how cash moved in and out of a business during a period of time. It's divided into 3 sections. So we have the operating section, the investing section, and the financing section. So in the operating section, we're talking about the cash flows related to what the business does to make money. So we're seeing cash flows related to revenues and expenses here. And actually we can see that they're using the indirect method. And the reason why we can see that is because we start this section with net income, and then these additions and subtractions are all related to either timing differences between when a transaction impacted net income and when it impacted cash, or their classification things. There might be things included in net income that weren't related to what the business does on an operational basis to earn money. When we look at this section prepared under the indirect method, really focusing on the total here more than anything. And we want to make sure that the business operations are providing cash flow. We want to see positive cash flow from business operations, especially when we look at over time, when we compare it from year to year. The investing section is looking at cash flow related to long-term assets. In this particular report, there is no activity in that section, but if you're selling things off like buildings or land or equipment that the business uses in its operations, that would show up here, and the purchase of those items for cash would show up here as well. For a growing business, you might see a net outflow in this section that just indicates the business is putting more cash into long-term assets than it has cash coming in from the sale of those long-term assets. The last section of the statement of cash flows is called the financing section, and in this example, again, we don't see any activity. The financing section's looking at liabilities and owner investments, as well as payments of those loans and notes and bonds, and payments to the owners as well. The owners and the banks provide financing, and then it's showing the cash inflows related to that, as well as the cash outflows to those same entities. Once again, make sure to save a PDF of this report. You will be submitting it for this week's homework as well. And that brings us to our final financial statement that you're going to need to run for this week, which is our statement of retained earnings. Once again, don't show the zero amounts, roll with the default dates. So the statement of retained earnings shows how the company's net income and dividends affect the retained earnings. It's looking at how the profits of the company were either kept in the business or distributed to the owners. Thus the name retained earnings. Earnings implies profit, net income, and to retain means to keep. So it's the earnings that have been kept in the company. It looks like this company did not have any owner dividends or withdrawals during the period, so there's no subtraction there. They retained all of the net income within the business during the period. Make a PDF of this report and submit it to me, and that's it for this week. Just looking for those 6 financial statements for your submission. All your figures should match up with mine. If they don't, review the feedback in Canvas from your earlier chapters. If you need help, please reach out.